Hey traders, Nathan.bray here from ACY Securities. Well, today I want to talk about using our charting key levels in the market and in effect trying to talk about major news events, news articles coming out from financial institutions such as Bloomberg, CNBC, etc. So I want to talk about how they can sometimes appear quite different and to understand the differences we might be seeing. So recently, we've seen a strong downtrend in this US dollar, okay, over the last few weeks. Now, as the trend was developing and momentum was building, I found you ended up with headlines like, oh, weakening US dollar, we could be going in not for a soft landing, but a hard landing. Data's starting to come out poorly. They're going to cut rates. Oh, they're going to cut probably twice. And this could be the end, right? By the time it reached the bottom of the range, the stories were the BRICS are taking over. This is the end of the reserve currency, right, for the US dollar. Now, when I look at it, I think if I'm short US dollars, then I'm likely to click on a headline that's in line with what I hope happens. Right? They're just giving me some what I call chart candy. They're telling me what I want to hear. All right. So unfortunately, all that does is means I'll click on their article and put my eyeballs on their ads, which is precisely what they want to do. Okay. But the question is, does that help me as a trader? So what I'm looking at is saying, let's try to keep our eyes off things that we can't quantify. So how do we do that? Well, we look at a chart, okay? So if I'm looking at this US dollar index, you'll see it behind me now. You'll see price was moving down very quickly, but it reached a weekly level of support, okay? Around this 150 level, okay? And I'm looking at price flying down, thinking it's never gonna stop. But then all of a sudden, there is a high probability based on previous 4 or 5 times it's reached this price point where the sellers weren't selling as hard and suddenly buyers were coming into the market, okay? However, the storylines were still very, very weak and growing in momentum. So what I tend to look for is let's leave the stories alone. Let's keep away from the momentum and the fervor, and let's look at what the chart is telling us. So in this case, I wanted to see this level bounce. So that was my first view, to say, okay, price is down at this level. I'm going to stop listening to the media now, and I'm going to watch what the market tells me, which is looking at the price point. So price did stall, and even if it is a downtrend and it's going to continue lower, we could find these levels could provide us at least a temporary relief. Okay, so there could be some profit taking from those who are short, things like that. So what I'm looking for is in effect technical hopium, all right? I want to see, for example, on a 4-hour chart, which you'll see here, price gets down to this support level, it bounces a bit, it retests and it puts in a slightly higher bottom, and then price breaks out to the upside. That's the hopium, folks. That's the fact. That's what the market is screaming to us. That's telling us there is buying support here. So do I still want to be a seller? And therefore, I try to keep in line with the direction of the market as opposed to listening to the info babes or guys with their beautiful new rinse through their hair. I wish I had a good rinse and I had hair. But if you start to listen to the market and what it's telling you, use your charts, and in moments like that of great uncertainty, it might help to try and blur out all the ignacious, eruptive headlines telling us for certain what's going to happen. That's all from me, folks. Stick to your charts. Let go of the headlines.